the human cost of the coronavirus is something that we take very seriously. And my first priority has to be looking out for the health, welfare of our people. So we're very focused on putting the right protocols and policies in place and monitoring the situation carefully to ensure that our employees are taken care of and that our portfolio companies, their extended families, and there's a lot of dislocation, disruption that's occurred. So that's my first priority. Short term, no doubt, there are real financial impacts. And I think perhaps folks are going to start to appreciate that maybe these financial impacts are worse than people thought while the situation was just beginning. But this situation is clearly evolving. We have to be very, very, very vigilant and ensure that our portfolio companies are set up right, capitalized the right way. But no doubt there's going to be a financial impact. Longer term, I'm very hopeful that we'll be able to push through this. We have to navigate it very carefully. But when I go to sleep at night, when I wake up, the most important thing is I have to ensure that my employees and my people are well taken care of.
What do you think, how much growth will be chopped off from China, say?
Sure.
Yeah.
It's hard to estimate, but you can't have half of the world's second largest economy go dormant and not have that affect the numbers. You can't have 55% of world manufacturing that flows through China in some shape or form and not have an impact on the global economy. So I fully expect Q1 results are not going to be that great. And I think it's going to take longer than people suspect to get the economy back going again, because there's so much disruption in the supply chain. I mean, just a case in point, there are 60,000, by our estimate, containers that are in the wrong places, in the wrong ports, in the wrong locations. And it's going to take time to get all that put into the right place and put onto the right ships, into the right ports, and then get the supply chain moving again. So my guess is, unfortunately, there will be a short-term impact. Longer term, we're hopeful to navigate through it. But it's also fair to say none of us are experts. We're all dealing with this in real time, and we're carefully trying to work our way through it.
Normally, if there is such an adverse shock, we very often get central bank intervention. But looking at the situation with the central banks, there's not so much ammunition left. So are you concerned about that sort of disbalance here?
Sure. Well, first of all, yes, the central banks have been accommodative, and I think it's a reassuring thing, especially when you have an unknown or an uncertain thing like the virus that's hitting the world's markets. The U.S. probably has a little bit more ammunition than you think. The Fed hiked 9 times. They gave 3 of that back. So there's still a little bit of room for the Fed. But clearly, I think the increasing dialogue in the future is going to center or evolve around political leadership, fiscal leadership, and how, in conjunction and in coordination with central banks, with the right regulatory policies, we can stimulate and drive longer-term aggregate demand and growth. I think to think that central banks can solve structural issues by manipulating rates, I think it doesn't work. I think the monetary authorities have done a wonderful job restoring stability and getting asset reflation going. But it's unfair of us to think about the central bank authorities as solving structural problems. You need political leadership and fiscal leadership to join that debate to get that going.
You call it asset reflation, others call it asset bubble. So where are we?
Well, I think asset reflation is a very descriptive way of describing what's happened with valuations. In terms of bubbles, I know people like to talk about bubbles. When we take a step back and think about it, we don't really see real excesses in any one particular sector or any large market. Every once in a while you see indications that something moved up a little bit higher than it ought to, and then it corrects. But generally speaking, at least in the U.S., the households are not leveraged all that much. Banks are very healthy, if anything, perhaps overcapitalized. And so we're not really seeing the so-called huge bubbles that you just referred to.
Let's talk about returns. We had that Bain study out that the U.S. market, the public market, has actually overperformed or outperformed the private equity space. So are you concerned about that, like as a credibility test for your industry?
Sure. A couple comments. I think the report does a wonderful job of spotlighting put a spotlight on the fact that public equities have really outperformed their historical averages. And so the real question is, can that really continue Or do you suspect there'll be a reversion back to the mean because public markets have doubled the rate of return versus their historical averages? So that's kind of point number one. Point number two, it very much shows that private capital, private equity, private credit, all asset classes related to the private area, very much a mainstream investment strategy that's a central and essential part of all portfolios to drive returns in the future. I think the biggest impact of this report is it's going to cause people to try to understand, well, what's driving the returns? If you look at this report, multiples in the public markets expanded by 60%. By 60%, and that was the biggest driver of the returns on the public equity side. At Carlyle, I don't want to speak from the industry, but at Carlyle, we've looked at our returns very carefully. 2/3 of our returns are driven by operating improvements, revenue growth, and earnings growth. And less than 20% is driven by multiple expansion. So the real question is going to be, I think, what's the real driver of returns moving forward? And can public markets continue to outperform their historical averages, or do you suspect there could be a reversion back to the mean?
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.